What's up, guys? It's April 3rd, 2025. Had a big gap down in the markets, and when we have a big gap down in the markets, the day expectancy is a tradable leg in that direction and a sideways price action for the rest of the day. That's what we got. Pretty cool. I do think this was somewhat climactic. Multiple legs lower, pull back. We're in a trading range, and we break out that trading range. But now, what leg are we in? Well, we're in a couple legs. You could say leg one, pull back, leg two. You could argue leg one, pull back, leg two. You could say leg one, pull back, leg two, pull back, leg three. And you could say that we're in a trading range here, and we broke out of that trading range, and now we're restarting the leg one. I want to see something. I want to see how far, when we were 250 points away from the EMA. So we're pretty close. Look, 276, and then we came back to the EMA, 271. Here's a pretty far distance. Oh no, that's not right. What is it? So we're pretty far away from the EMA. Lots and lots of selling pressure, something we haven't seen in years. 2024, that's August 2024. So yeah, interesting time to be a trader. I know a lot of people are underwater. 15-minute chart, gap down, bar one, bad follow through, bar two and three, good follow through, bar four is a pullback, leg one, pullback, leg two, pullback, leg three. Then we see, what is that, 5 and 6, a bear leg down. So that could be a gap down, leg one, pullback, leg two, pullback, leg three. Then we rally, wedge top, leg one, pullback, leg two, pullback, leg three, testing the breakout point, and we get a tradable leg down. We can see multiple legs lower. The 15-minute chart looks clean to me. Leg one, pull back, leg two, pull back, leg three. Even a leg four. Leg one, pull back, leg two, pull back, leg three, pull back, leg four. Today was sideways, but we had more bear pressure. Let's think about the bullet analogy. You shoot a bullet into a box. The momentum will bounce around and then generally get spat back out the same way. And that's what happened here. So we shot a bullet here, momentum bounced around and got spat out the same way. I keep that in mind in trading ranges when I'm looking for reversals. I don't really look for reversals because I trade it doesn't really matter. I trade the side that makes 1R and then catch a second leg of whatever side just made 1R. Reversals are breakouts anyways. I'm sure some of you in the Discord are starting to understand that because it's trap traders, right? So in a breakout, you're trapping limit order traders. In a reversal, it's stop order traders getting trapped. What do I mean by that? So here's a breakout. Limit order bulls there's limit order bulls sitting below bar one. It breaks out, they get trapped, they sell out their positions. Bar 20, bar 21 and 22 is a reversal. So stop order bears don't get filled, but market order bears and bears that are already short are now. If you got short up here, you're giving up profits. If you got short over down here, you're losing profits. So bears are gonna buy back shorts, and that causes a reversal. So the context is the same, but reversals are harder to spot. The market's either breaking or reversing. That's the only two things it can be doing at any given time. Big gap down, bar one, bad follow through. Bar two actually looks like the market's trying to reverse. I didn't trade today. I had a bullish bias because of the situation here. I thought we were having this kind of situation, but with such a big gap down, market sold off, and then the expectancy for big gap down is a tradable leg in that direction and sideways price action. Big gap down, bar one, bad follow through. Bar two follow through for the bulls, bad for the bears. But bar one and two end up being a pullback from the gap down, and we get sell off. 3, bear bar closing on slow. 4, bear bar closing on slow. 5 is a pullback. It's first trend line break. So it's breaking above bar 4's high. That's the start of leg 2. There are more sellers above bar 4 than buyers. And then we see 6, 7. 6 is a bear bar closing around its midpoint but has more tail. So trading range. Then we see 7, a good breakout bar that produces a gap. Now we have trapped bulls right there. This is not the accurate size of the gap. I'm just drawing it a little bit bigger so we can see the gap is smaller. So it's about that. Bar 8 follow through. We have 3 bars in a row. That's a good micro channel. Bar 9 sells off, and then we have a rally on 10. So there's the start of the second leg. So you could say this is so the breakout resets the leg count. Leg 1, pull back leg 2. And then a visible pullback 12, first reversal shallow, tail above it. You can see that more bears were ready to short the pullback than bulls buying it. And we see that with 13, 14, 15. Another 3 bars that breaks out, 16. And then we have bear bars shrinking, 17 and 18. 19 is not an inside bar, but it is a small bull bar after 3 legs down. Leg 1, pull back, leg 2, pull back, leg 3. Or you could just reset the count. Leg 1, pull back, leg 2, pull back, leg 3. 20 would be the leg 3 because it went 1 tick below that. 21, good bull bar. It's closing not high, but there's still some tail, so bulls scalped out. And on 22, we see the follow through. 22 is follow through for the bull bar, but it doesn't break far past 21, so that's not the best follow through. 23 becomes a pullback. Bulls didn't even get 3 bars in a row, so we have a leg 1, pullback, leg 2, pullback, leg 3. 24, part of that pullback. There's actually a miniature bull leg right there, but it's a fractal leg. 25, bull bar closing outside. 26 is follow through. 27, bull bar closing on the EMA, and there's more sellers. You can just get if you have a limit order below 6, because that's a breakout point, you get filled on 27. You can scalp out for 1 or 6. I like that trade. I also like this trade here. Oh, let's talk about the thing. I'll talk about the trades after. So yeah, there's a trade there. And then you see this being a pullback 29, 30, 31. Bull bars trying to break above the EMA. Really bad follow through. There's more tails. So every time the bars pop above the EMA, they're getting sold. Then we see 33, good bull bar closing outside above the EMA for the first time after this gap down. And generally this is a better fade. So if you remember the video from a couple of days ago, I talked about how this is generally a better fade after a strong sell-off. Price action is fractal, and you guys are trying to see how I'm applying the same exact analysis on every chart, and then we use our trader's imagination to piece them together. So 33, bulls did make a little bit of money, but if you faded it, if you're a bear, you just sold it, you'd sit through a 12-point drawdown. That's not bad. And then it sells off 37, 37 good bear bar closing out slow, trying to get a second leg. I also think we're in a training range. Well, we are in a training range. We got a bear market channel and a bull market channel. 38, small bull bar closing on the EMA. You might think this is a breakout and pullback, but the bulls have already had 3 legs up, and 37 is damaging. 39 rallies, so if you bought the high, you barely have a chance to get up for a small loss. Sells off. 40 is trapping bears. Actually, it sells off and reverses, but it's not that bad. Like, it's not closing far. The bears that short 39 are gonna sit through a couple point pullback and then they make money, because 39 could be that 38, 39 could be that first reversal that fails after 37. This leg down here, right here, you see how it like starts up here and goes down there? Look at the 15. Actually, hold on. Look at the 15-minute chart. Okay, this is the 45-minute. Excuse me. 2 strong bull bars, rallies, and sells off. So look at this. This bar, this 37, has 3 strong bear bars in it, and then a shallow pullback. So although it's a 1 bar breakout, you can still think of it in the same context as 3 bars, and that'll keep your thinking the same. So there's your 3 bars. 1, 2, 3, 4. Bear bars closing on their lows. It's really important that we apply the same thinking in all aspects of the market, whether it's a breakout follow through or a breakout bad follow through and it reverses. Not the best follow through, but it does see a second leg down because the context is good for a second leg down. This is the first pullback after a breakout and after breakout, with the breakout being the gap down. 41, bear bar closing below the EMA, producing a gap with 38, 41, and 42. The gap here is weak because it's 2 bull bars, and you can see that bulls that bought here can buy more lower and they get out 50%. That's enough pressure to cause a sell-off. Market sells off 46, 47, 48. 3 bar pullback. I still don't think that's a good buy. It's testing here. Just because you see the market going up doesn't mean it's going to reverse. This is just a pullback trading a double top bear flag. I actually like 52 for a market order. Double top bear flag, and then we see 53, 54. 53 is a bear bar closing around this midpoint with a tail, small pullback, and then sells off. 54 bear bar closing on slow. 55 follow through. Now we have 1, 2, 3, 4, 5, 6, 56, 7, 8, 8 bear bars closing, 8 candles closing bearish. So you can see that bears are still willing to short lows. 60 small inside bar. I think it's good to get out of shorts when you see inside bars, and you can see that there was a pullback into the EMA. Again, 3 bull bars, but it's just a pullback testing the breakout point here. So maybe you have limit orders set at the previous breakout point. You're going to get filled and catch the next swing down. 65 bear bar closing on slow. 66 is a bull bar, could just be acting as a pull. Well, it's acting as a pullback. 67 bear bar. It looks like it's an inside bar, so it's breakout mode. I said over here you should get out of shorts because it's a inside bar. That's a bull inside bar at range lows. This is a bear inside bar close to the EMA, so if you're short, I think it's okay to hold. But you're always going to be, any trade you hold, you're risking the chance of a reversal. So just the probabilities for reversal change depending what the chart is doing. I think this is an okay hold. I think that's a bad hold. 3 legs lower. Let's say the market count, the leg count restarts with the breakout. Leg 1, pull back, leg 2, pull back, leg 3. Leg 1, pull back, leg 2, pull back, leg 3. So you're holding short on a third leg down on inside bar. You can risk the chance of a reversal, and it does reverse, but the reversal fails. Here, now we're in a trading range. We're close to the EMA. I think that's okay to hold. 50, what is that? 67 rallies and sells off. No body, but it has a tail, so sell it. People are still selling. Bears are still selling the EMA. 69 bear bar closing on slow. 70 climactic, bad close, but still gets some follow through. So that's saying that 67 through 70 was shot to get second leg down and a third leg. Leg 1, pull back, leg 2, pull back, leg 3. Pull back 74, 75, gets shorted again 76, and then we go more sideways for the rest of the day. I want to see the overnight session real quick. Okay, so overnight session selling off, sideways. The people that shorted this bar made 1 R quickly, so if I was trading, I'd have a limit order set there, and I'd hope to target 1 R. It's a repeatable trade. That's how I trade. It's been doing me okay. It's been doing me justice. What are the trades today? So we always have the morning breakout. When I go over trades, I'm not going over today. It's just going to be trades I see. I didn't trade today. I have some things I have to do outside the markets in the morning for the next couple of days. So I'm still going to do the reviews. 1-to-1. You know what's crazy is if you put your stop 1-to-1, your stop doesn't get hit. 1-to-1's met here, but you're going to be sitting through a horrible pullback, and then you can make way more money scalping. So we see this strong bear leg, and we acknowledge that 12 is a shallow pullback. You short that, and you can scalp out at a new low. Then it rallies 3 legs lower, so the context for buying 24 or 25 pullback is good into the EMA, and you can see 1-to-1 was met. Market's starting to go sideways. Here's 4 bars, but it's not good. The context is bad, so we're gonna skip that measured move. 37, good context for a measured move down, and that was met. That's pretty slow to get 1 R is off 46, but you'd sit through a drawdown, but then you'd be in profits by bar 41. Not the worst, but there is a drawdown. 3 more bars. Now we know we're in a chain range. We had a rally here, so we want to short high, short the pop, and then you make your 1-to-1. Now we have another bear market channel down here. I didn't do a mic check today. I hope the mic is on. Same situation. We know we're in a trading range, so we're gonna look to short pullbacks because the market conditions have changed. Where are we in the market cycle? We're towards the end of the market cycle, right? We're either in a trading range or we're in a channel. And if we're in that channel, we're towards the end of the channel because we've had more than 3 legs lower. 1-to-1 was met with this bar 70, and then you could get a little bit extra, but I don't think it's worth trading past bar 72, but that looks like it was met as well pretty quick. So you short the pullback, but by shorting 75 this late in the day, I think you're reaching. It's a reach. Hope you guys had a good one. Hope you guys traded safe. I know the markets are getting volatile. I'm taking it easy. I gotta do some things outside the markets this month, and I have some birthdays to get to. So I'll still be doing this, still talking to everyone in Discord. The membership videos are going to be dropping. I got Trading Psychology 2 ready. Well, going to be ready soon. Hope you guys had a good one. Thank you for your support. I always appreciate it. Hope you have a good day. If you learned something, share the show. Don't be a hoe. And I'll talk to you guys tomorrow. It's Friday, so let's be smart. Let's trade smart. Don't move stops. Don't move your PTs. We stay disciplined and we will make money. Thank you, everyone. Have a good day.